Hey everyone, my name is Joe Carroll, I'm going to be doing my story behind numbers for the Gap. Um, I actually didn't really know this until I started looking into this company more, that it's four brands. Um, the Gap Inc. makes up of Gap, Banana Republic, Old Navy, and Athleta. Quick little table of contents. We're going to do a company overview, balance sheet, statement of stockholders' equity, income statements, cash flows, and then a conclusion. Okay. The company overview, and according to their website and Form 10K, the Gap Inc. is a collection of purpose-led lifestyle brands offering apparel, accessories, and personal care for women, men, and children. Um, a little background kind of on why I picked the Gap. My godmother used to give me a Gap gift card on my birthday every year, up until until like college, and I never really wanted to use it. And I actually didn't even realize that it wasn't more than just the Gap. I knew they had Old Navy. I didn't realize that they had Banana Republic and Athleta under their brand, but they do. So there's the four brands. There's Old Navy, and Gap, which are probably the two main ones, which most people have heard of. Old Navy is described as a value apparel brand. Um, Gap is described as an authority on modern American style. Um, Kind of makes sense given how old the company is. Banana Republic is a travel and adventure outfitter. And then Athleta is their fitness brand, more of a premium fitness and lifestyle brand. Um, some business facts. Their business typically follows a seasonal pattern, which is common with most retail stores. Their sales peak towards the end of the year, which is why their Form 10K, their year end is in the end of January. Um, Obviously, it's a very competitive market with retail. Um, I, the Gap Inc. in general has kind of been in decline, and I think most people would say that they don't frequently shop at any of those four brands, at least in my age demographic. Maybe with Athleta being an exception. Um, they're actually building an Athleta down by my house that hasn't opened yet, which is kind of funny, just the timing of all that. Um, they have 95,000 employees. over 80% of them work in their retail stores, 9% at headquarter locations, and then 10 at distribution centers. So the majority of their workforce is at retail stores, which is a primary way that they operate their business is more of retail stores. Some noteworthy events that took place this last fiscal year. Their president and CEO, Sonia Snigel, she stepped down and resigned from the company's board as well. And on the same day, Bob Martin took over as CEO and executive chair of the board, as well as president on an interim basis. And I believe that is still the case as I last checked. So that's kind of a nice little tidbit to take into the review, is that their senior management is kind of going through a bit of turnover. Another big event, I don't even know if it was a big event because I didn't even realize this, but I'm sure most people have heard of Kanye West and his brand Yeezy and what they had with Adidas. Turns out Gap also had a relationship with Yeezy. So they ended their relationship with Yeezy. The contract with Yeezy Gap was terminated due to some things, obviously, that Kanye's had, and recorded a pre-tax impairment cost of 53 million, primarily related to inventory. So I thought that was kind of interesting. Another notable event, they are continuing to close Gap and Banana Republic stores. It's noted that they are trying to approximately close 350 stores from 2020 till the end of this year. And on the Form 10K, which was back in January, I think they were at 304 total closed stores to the point up to date. So it's kind of a significant amount of closures. Some financial facts that just kind of happened in the fiscal year 2022. Their net sales decreased 6% to 15.6 billion. Store sales decreased and online sales decreased 6 and 7% respectively, which is kind of a big deal, even if their online sales decreased, I would think, considering you don't have to physically go to the store. Their profit was about $1.2 billion less from 2021 at 5.4. They had an operating loss for the year of 69 million compared to 2021 where they had income of 810 million. Their 3 years that they provided on their financial report was obviously 2020, 21, and 22. 3 very different years. 2020 obviously had a huge impact with COVID. 2021, a bit of like a bounce back, and I feel like that has to do with a lot of tax breaks from COVID. And then 2022 kind of feels more of like a getting back to normal status quo kind of operating year. But that was just something I noticed because all 3 years were kind of wildly different in terms of the numbers. Moving on, so for 2022, they had a net loss of 202 million compared to an income of 256 the year prior. And I think the year prior to that, during COVID, it was like a $600 million loss. So kind of all over the board. Their diluted loss per share was 55 cents compared to a earning per share of 67 cents in 2021. And then their merchandise inventory decreased about 20% from the prior year. Okay, moving on to the balance sheet and statement of stockholders' equity. Like I said, the balance sheet their Form 10K is dated as for the end of January, which makes sense given their industry and trying to get all of their numbers for after the holiday season. But they did reveal a total decline in assets compared to the previous year. They faced a lot of challenges, several being macroeconomics, decreased sales, reduced inventory, and profitability, which led to the loss. They did reference the shipping delays and just getting their product in general, which I think has been kind of common, not just really in retail, but across the board in present day. They do, however, maintain a relatively healthy level of liquidity with their current ratio of 1.42. Then I'm going to go over some notable assets and liabilities from their balance sheet. They do have a good amount of cash and cash equivalent on hand at 1,215 million or 1.2 billion. They mentioned that it's highly liquid and fixed rate, so they can convert it to cash at pretty short amount of time for some of their cash equivalents. Merchandise inventory. They have a ton of goods, obviously goods, material, inventory, stuff for all 4 of their brands at 2,389 million. As one would expect, they also have a fair amount of property and equipment at 2,688 million. That is controlled by Gap Inc. And that's mostly stores. I do believe, I remember correctly, that Gap and Old Navy, I think, had the most stores, followed by, I want to say Athleta, maybe, but Banana Republic was definitely last. Moving on, operating leases. These are just lease agreements for property, and that is at 3,173 million. And liabilities, they do have a large accounts payable at 1,320 million. It did mention largely related to inventory. Accrued expense and other current liabilities at 1,219 million. These are just things that they have incurred but haven't paid yet. Operating lease liabilities, they're expected to be settled in the next 12 months, and that's at 667 million. And then some long-term debt and long-term operating lease liabilities at 1,486 and 3,517 million, respectively. These are just debt and lease obligations that are not due within the year. This is their balance sheet broken down in percentages, common size balance sheet for this year and previous year, fiscal year. Just a couple things to point out is there, you can see their total long-term liability increased a little. Their current liabilities went down a bit. And then the stockholders' equity decrease is fairly low at 19%. So just some interesting things to point out. Accounts payable also went down about 4%. And their cash increased, which is good. But as they mentioned in their management review, their inventory kind of went down a bit. And you can kind of see that here. Moving on to their shares authorized and outstanding. So they had 2.3 billion shares authorized with only 366 million outstanding. As of January 28, 2023, they had a 4.83 billion market cap. I think the stock price was $13.20. I think it's gone down since then. I can actually check quickly. And then their book value is 2.23 billion, so a slight difference, obviously, for their market to book ratio. Yeah, their current stock price is actually $11.20, and I looked year over year, and it's kind of just been a steady decline. They do, however, pay out dividends, and it's been fairly consistent. $60 or 60 cents per share, and they do it quarterly at 15 cents a share. Total assets financed by owners, like I said, it was about 18, so a little over 20 or a little under 20, and they're financed by non-owners at just above 80. So they're heavily financed by non-owners, meaning they're borrowing a lot of their money. And with the current landscape for the retail space, it kind of is a common theme, at least in my opinion. Does the company have any positive and negative net working capital? They have a healthy net working capital at 1.42 ratio. Their current assets divided by their liabilities. This is kind of common, I would say, in retail stores. They're more of cash or carry, so their turnover is pretty high, and they possess an ample amount of short-term assets to meet their obligations. So even in challenging environments like today, it kind of is a good thing for a retail company. Their income statement. The one thing that was kind of noteworthy is how limited the operating expenses were. It just was a single line. Didn't really break out what was the main reasoning for all the expenses. But some of the few expenses that I did see were interest expense, interest income, loss before taxes, and income tax. All pretty significant and all contributing to their overall net income loss of 202 million, as mentioned earlier. How do they generate revenue? As I said, they're a retail store. Their primary source of revenue is from selling their clothing. They have obviously shifted towards a more online presence, as most retail company or clothing companies have. Hasn't been a ton of change, though, in the way they operate in terms of their stores. They are closing stores, as I mentioned, to kind of cut costs. But overall, the change in source of revenue has kind of been steady and the same for a long time. Cost of goods sold. They are primarily linked to expenses for getting their clothing, which is their inventory. And then one thing I did mention earlier about their brand relationship with Easy Gap that was terminated, they they marked that as a cost of goods sold. So that loss was incurred in their cost of goods sold line item, which I thought was kind of interesting. Profit margin 34.4. Net income as a percentage of sale, like I said, they had a loss this year, so it was negative 1.29. Their profitability in 2021 was higher than 2020, as I mentioned. Like I said, it was kind of a wild 3-year time range in terms of numbers, just because of COVID for 2020. A bit of an increase for 2021, largely probably due to people being out and about more and the world kind of reopening. And then also I think there was some good tax breaks. And then 2022 kind of getting back to more of normal operating procedures. Statements of cash flow, how they generate their revenue. It's largely, like I said, through retail stores. There's been a shift towards an online presence, but the company isn't that worried about their forms of revenue. A couple of their notable cash flows for operating activity, they had merchandise inventory, so they spent $554 million used to purchase inventory and paid $554 million on debts that they owed. Investing activity, there was $685 million in cash used to purchase property and equipment. Some of that being the store down the street from my house. Net proceeds on sales of buildings was $458 million, so a little over $200 million in total cash used for investing activity. And then financing, they took out $350,000 of cash from their revolving credit, and then also paid $240 million in dividends. Their total current liabilities, like I said, were $3,256 million, and their total generated cash from operating activities was $607 million. That seems kind of far off, but based off of other aspects like their cash balance, cash equivalent, the company feels very confident in the ability to meet their operational needs for the next 12 months and beyond. So in conclusion, the Gap has faced quite a few challenging years. I don't think that's a surprise if you would just ask most people, probably aged 20 to like 45 or 50, that the Gap hasn't really been like a main brand I think that they would shop at. And that kind of comes true in their financial statements and their historical stock performance. They're definitely undergoing some transition periods with their appointment of an interim CEO. And I think they're definitely going to look forward to a couple positive improvements and change in the near future. So thank you.